Hey everybody, how's it going? John Napolitano here with you from Top Trading Pros. I hope everybody is doing well today. A topic that came up this week that a lot of people are asking about is this concept of edge. A lot of traders use that word. You might have heard about it online, or other traders use it in their everyday language that they have to have an edge in order to get into a trade. What exactly does an edge mean? Some traders believe their style of trading is their edge, or that the way they look at markets is an edge. Um, I make my edge basically the beginning of every trade that I do. In other words, I don't get into a trade unless I believe that I have an edge of some kind. And what I mean by edge is some sort of an advantage to get into this trade. What is my justification for putting this particular trade or this particular idea in harm's way? Why am I allocating my hard-earned money and my hard-earned capital into that particular idea? So in order for that to pass my test, there has to be a fundamental reason why I'm getting into a trade. And to me, that's what edge is. It has nothing to do necessarily with style or with my ability to use algorithms or my ability to use technical analysis. That comes with the territory. In order to get into every individual trade, there has to be an edge. So we're going to jump right into it today. I'm going to share my screen with you here, and we're going to talk about a name that I recently came across. And I'm going to give you just a simple example of basically what edge means. So let me share my screen with you here. I'm going to jump into it. Let me just give you my screen. This is an example of Newmont Mining. So Newmont Mining is a gold mining stock. Some of you might not have ever heard of it, but it happens to be one of the largest gold miners in the world. They have mines everywhere. And basically, Newmont Mining trades usually in tandem with gold, but it tends to break out more. It's a little bit more volatile than the underlying gold itself. So I really enjoy trading this name when I believe this particular group or this particular industry is going to go higher. So I started looking at the charts, and one of the things that I noticed over the weekend was that gold is obviously at a pretty much at a 1-year high. So I'm going to show you GLD, which is basically the gold ETF. So this tracks gold bullion. I'm going to go here and jump into this first, and I'm going to show you my whole idea of edge. This is a daily chart of gold. And as you can see, it's basically had quite the nice run. It's actually near its highs here from all the way back last April. I actually have to go all the way back to a weekly chart in order to try to figure out where overhead resistance might be. So gold is flirting with $2,000 an ounce. We obviously have a serious inflation problem in this country. Even though the markets have bounced back, gold continues to remain high, which does not always happen. Usually gold is not always correlated with the stock market. Some people go into gold as a safe haven. But in this case, what's happening now is that the market has actually had a pretty decent quarter. The NASDAQ has rallied, but the gold itself is pretty resilient. And that tells me that inflation is here to stay. People are nervous that inflation might not go away anytime soon. Maybe the Fed will control it. Maybe it'll go a little bit lower. But those days of 1%, 2% is just not happening anytime soon. And that's what the price of gold is telling me. So with that in mind, I'm going to start looking at opportunity within that realm in order to get my edge. And I look through my screeners, and sure enough, I come across Newmont Mining. Now, Newmont Mining is, like I said, one of the largest gold miners out there. And it looks like it really hasn't participated as much as gold itself, which is basically something that I'm a little confused about. But over the last kind of week or so, you'll notice that it's above its moving averages. You have a upward sloping 20, and the 50 is starting to become a little bit more normalized. This 50-day moving average here is this tan line. So it's broken about pretty much above the 50-day. And what I tell my students at toptradingpros.com, when I teach these in my classes, when I teach option strategies, my line in the sand is that 50-day moving average. I want to see a name above that and stay above that in order for me to be somewhat bullish. And that's exactly what I find here in this Newmont mining. I find that for the last week or so, it's managed to sustain and go above the 50-day moving average. And from a technical standpoint, forget about what's going on with gold and the inflation story, like I just mentioned. Just from a technical standpoint, you don't really have any overhead resistance here until it gets all the way up to like 54 or so. If you look up here, you have this gap right here, and it looks like it wants to break out and touch resistance. So right now, the current stock price is 49.47. And there's really nowhere for this stock to go, resistance wise, until it gets well above 54. So to me, that seems like a really good short-term option trading opportunity. So these are the types of trades that I love. And what I do is when I start setting up a trade, the first thing I ask myself before I go through my standard 6-step process, which you would learn in my classes, I teach something called edge. You have to have justification for getting into a trade. So obviously gold is at an all-time high. I probably wouldn't want to trade GLD compared to NEM because to me, NEM has more room to run. So right off the bat, it's in the right sector or group, which is gold and gold mining. There's a reason for me to get into the trade. Gold has been stubbornly high, and along with the other mining stocks as well. So to me, this is a good enough reason to have that extra edge to put my money in harm's way and to get into this trade. So how do I exactly do it? What do I exactly do? That's a little bit more of a larger term question. It depends on volatility. It depends on what my ultimate target is, what my sizing is, what my stop is going to be. These are all things I teach in my classes at toptradingpros.com. We have plenty of videos on YouTube that talks about some of these strategies, but I wanted to just show you what the definition of edge is, in my opinion. I think it's very important that every trader, whether you're trading options or stocks, you have to have a fundamental reason why you're getting into a trade, whether it be technicals, whether it be a certain reason. That just gives you an extra advantage over everything else than to just look at a chart and say, it looks like a good entry point. You have to have a good enough reason besides that in order to separate one trade from another. So I hope this short video is helpful. Before you get into every trade, I want you to always ask yourself the question, what is my perceived edge? What do I think I could get? What do I think makes me decide to get into this trade over maybe something else? So I hope this was helpful. Please subscribe to our YouTube channel, toptradingpros.com. We have plenty of educational videos like this, as well as other topics. If you're really interested in trading options, sign up for my next boot camp on toptradingpros.com. You will see the link to where you can sign up for the next boot camp, and you'll have all the curriculum and all the course material listing right in front of you. You'll be able to see exactly what it entails. Okay. So I hope you enjoy the rest of your day. Happy trading, everybody. And I'll talk to you guys soon. Take care, everybody.